morning, good morning, good morning. My name is David McGrath. This is Property Value, where I talk about commercial real estate focused on South Florida. It's Monday, April 25th, 2022. And the first article goes something like this. International investors set up for another active year of U.S. property acquisitions. Favored property types include multifamily, life science, and industrial, according to annual survey. This is by Mark Heschmeyer. Mark Heschmeyer of the CoStar News says foreign investors were net sellers of U.S. properties in the first quarter of the year as they anticipate another strong year of acquisitions. Selling in the first quarter of the year is not uncommon for foreign investors, according to the CoStar data, and they have been net sellers 7 times in that period over the past 14 years. The selling activity follows record buying activity in the fourth quarter and for all of 2021 combined. Foreign investors participated in $32.3 billion in purchases in the fourth quarter, according to CoStar data, and $73 billion for the year. Overall, foreign investors have been net buyers every year for the past 14 years, going back to the end of the Great Recession. The pattern is expected to continue this year, according to the Association of Foreign Investors in Real Estate, which just released its annual International Investor Survey. We asked investors if they were expecting to be a net buyer or net seller. A majority of them expect to be a net buyer. Gunnar Bronson, CEO of Fire, said in an email to CoStar News, they usually have dispositions in any given year, but this year, new acquisitions are expected to exceed any sales. The international investor outlook for U.S. properties remains positive in the midst of an economy slowed by the pandemic, global tension after Russia invasion of Ukraine, escalating inflation, and Federal Reserve plan to fight that inflation by raising bank borrowing rates, according to Fire. About 75% of the respondents to the survey said they expect their volume of investment activity and revenue growth to increase over the coming year, and they expect to do so in a big way. Roughly 80% estimated they will be allocating up to $5 billion for U.S. investment in 2022. This positive outlook is underscored by a majority of acceptance, 8 out of 10, that many cultural fundamentals have been permanently changed by the prolonged pandemic, according to Fire. Shifts from large U.S. markets. The survey, conducted in February, reveals institutional insight and intent toward future real estate investment, recognizing the altered attitudes toward live-work preferences among U.S. cities coming out of the prolonged pandemic. Investors also indicate a sustained shift away from the largest U.S. markets for planned investments this year. We now have a clear picture on long-term impact of the pandemic on real estate investment, with altered cultural attitudes and sustained strength in investment, secondary and tertiary U.S. cities led by Austin, Atlanta, Boston, Dallas, Bronson said. Against the ranking of global cities, respondents selected the Texas capital of Austin, Atlanta, and Boston as the top 3 cities for planned global investment in 2022. London is the only non-U.S. city in the top 5, followed by New York and Seattle. Last year's top 3 were Austin, Boston, and Dallas. Among the preferred property types in the coming year, international investors said they favored increasing investment in multifamily, life sciences, and industrial assets. They gave an overall positive outlook for U.S. real estate, according to the survey. In the first quarter, global investors bought $2.2 billion of U.S. industrial properties and $1.88 billion of multifamily properties, according to CoStar data. Office property purchases also were prevalent in the first quarter with $2.15 billion in deals. Prevalent is the word. The largest foreign acquisition in the first quarter was South Korea's Hana Alternative Asset Management team, teaming with Vision Properties of New Jersey to buy the 431,000 square foot 70 Hudson Street office building in Jersey City, New Jersey for $300 million. However, that did not come close to the amount of such properties international investors sold, which was $5.84 billion, according to CoStar data. That was the largest segment by a wide margin. The next largest property types sold were multifamily at $1.92 billion, hospitality at $1.84 billion, and then retail at 1 billion. The largest sale posted in the first quarter was Canada's Oxford Properties selling to Google St. John's Terminal a 1.3 million square foot office condominium still under construction at 532-564 Washington Street in New York for 2.1 billion. It's a big number, but Google's got the funds to put up for that 2.1 billion purchase price. Can't wait to see what that looks like when it's built. So what do we got going next? That was a little talk about international buyers. So the next headline says, this is from the Real Deal, South Florida Real Estate News by Catherine Kalergis. Lack of inventory, and this is bringing it back to South Florida, so this is more Miami news. Lack of inventory limits South Florida residential sales, as prices rise. Sales rose in parts of Miami-Dade, fell in Palm Beach, Fort Lauderdale as prices climbed across the region. So they rose in Miami-Dade, they fell in Palm Beach and Fort Lauderdale. That was a pretty little picture. And let's read this. Residential sales fell across much of South Florida in the first quarter as inventory continued to be absorbed at a faster clip than new listings were added. So the residential amount of sales sold, but not the amount of the actual unit, property, single family house, condo, what have you, whatever you were buying, townhouse. Sales rose in parts of Miami-Dade County, including Miami Beach and other barrier islands, but fell in Palm Beach, West Palm Beach, and other northern cities. Maybe the price is too high. Have we reached the ceiling yet? According to the Douglas Element reports authored by Jonathan Miller of Miller Samuel, median prices also continued to climb, and bidding wars became common. So you got the median prices climbing, but they didn't say the average price is climbing, meaning the outer barriers of these prices. Rising interest rates are expected to slow sales, according to the reports. But a majority of the sales are cash sales, especially in the high-end $1 million and up market. Miami's coastal mainland residential sales jumped 51% year over year to 5,273 closing in the coastal areas of Miami-Dade, which include greater downtown Miami, Coconut Grove, Palmetto Bay, and other neighborhoods. Wow, 5,000 sales. Good time to be a residential agent. Condo sales rose 69%. 3,000 closings in the first quarter. Inventory fell 63% to 1,900 listings. The median price of a condo in that area grew 33%. Median price of condo year over year grew 33%. That's some inflation. That's when inflation is good, when you have hard assets that go up along with it. So that price is $400,000, typical median price for a condo. Single family home sales increased 29% to 1,900 sales. Inventory declined. So let's see, we had 1,900 sales, single family. We had 3,000 condo sales. Looks like people are wanting to live in condos. Well, I guess the condo would be more of the investor style as well. So it says inventory declined 20% to 1,100 listings for single family houses. The median price for a single family home was $585, up 15% compared with the first quarter of last year. So single family homes only rose 15% year over year, where a condo grew it doubled. If you owned a condo, you got 2x increase. Miami Beach and the Barrier Islands. On the Barrier Islands of Miami Beach, Ball Harbor, Bay Harbor Islands, Fisher Island, Golden Beach, Indian Creek, Key Biscayne, Northern Bay Village, Sunny Isles Beach, and Surfside, residential sales rose 34% to 1,800 closings in the first quarter. That's because of the growing condo sales, which increased 47% annually to 14,000 closings. Inventory of condos declined 56% to 1,800 listings. The median price increased 5% to 536,000. 5% on the Barrier Islands year over year. Not such a big tick up in Inflation. Single-family homes sales fell 31% compared with the same period last year to 161 closings on the Barrier Islands. The median price rose 19% to 2.7 million, and inventory fell 33% to 232 listings. There's only 232 listings if you want to buy a house on the Barrier Islands. Coral Gables. Single-family homes sales rose 6.5%. Condo sales surged 107% to 128 sales. The number of condo listings fell 62%. Single-family home inventory dropped 6% to 62 closings. Prices kept growing. The median price of single-family homes in Coral Gables rose 57% to $1.8 million and up 37% for condos. So Coral Gables had the biggest X factor for inflation for people that own houses, or actually, if you owned a house and sold a house in Coral Gables. Wow. So those are some big numbers. Great time to be a residential real estate agent here in South Florida. They're definitely making some money year over year. So next article, third article, last article for today, which features a huge sale. This is right down the road from where our office is and from where I live. The article is written in South Florida Business Journal, and it's by Brian Bandel, senior reporter. Title states, Hollow family sells Brickell development site for, wait for it, $363 million. It's a piece of land. Right now it's being used as a parking lot. Basically the last piece of land that's waterfront here in the financial district. $363 million just for the piece of land. You can imagine how big of a building they're going to have to build there to recoup that and then make a profit. So let's read it. Florida East Coast Realty, led by the Hollow family. The Hollow family is also the family that supports the Florida International University's School of Real Estate, which is even named after the Hollow family, sold a prime waterfront development site in Miami's Brickell Financial District for $363 million. It says TWJ 1201 LLC, managed by Jerome Hollow of the Miami-based development family, sold the 2.5-acre parking lot at 1201 Biscayne Bay Drive to 1201 Biscayne Bay LLC, managed by Randall Davis in Chicago. The property last traded for $15.5 million in 2000. So they bought the property for $15.5 million 22 years ago. Didn't do anything with the property. Did literally nothing. They managed the parking lot. They probably just hired somebody. 22 years later, this thing didn't double in value, didn't triple in value, didn't even quadruple in value. It went from 15.5 million to 363 million. So it had a huge gain in value. That's to be expected, as it's one of the few waterfront development sites left in Brickell, which has many condo and office towers at the time when Miami is attracting more wealthy residents and new companies. 2016, FECR announced plans to develop the site with a 1,000-foot tower, which would have been the tallest in Florida, designed by Pritzker Prize-winning architect Norman Foster. It was to have 660 residence units, yet construction didn't take place. With sales of condos priced over $1 million in Miami at an all-time high in the first quarter, this could be a great time to launch sales of the new condo along Biscayne Bay. The question is whether it would be the tallest building in Florida when it's completed. The title currently belongs to the 868-foot Panorama Tower. Panorama Tower, which FECR built in Brickell, which is owned by the Hollow family. However, the Waldorf Astoria Residence Miami is planned downtown, and it would rise 1,049 feet, which would be the tallest tower in South Florida. There you go. That's all the news I've got for you today. But I do want to switch over here and take a look at the 10-year from the Wall Street Journal markets, U.S. 10-year Treasury note, 2.832, down 0.086 from Friday when we reported on it. So that's staying stable. Let's also look over here at the mortgage rates, and it says for today, Monday, April 25th, 2022, the average 30-year fixed rate is, drum roll please, 5.29. That's up 4 basis points from a week ago. If you're looking to refinance, the national 30-year fixed refinance rate is 5.26, an increase of 2 basis points from a week ago. At least the basis points increase is starting to slow down. Meanwhile, the national 15-year fixed refinance rate is 4.47, an increase of 6 basis points since the same time last week. I'm David McGard. You're listening to Property Value. Have a great Monday. See you tomorrow. Thanks.